Welcome to the Opening Bell Report.
If you've been watching the markets today, specifically the biotech sector, you might have noticed something, let's just call it violent.
Violent is definitely the word.
Yeah, there is green, there is up, and then there's whatever is happening with ImmunityBio right now. The ticker is IBRX. And looking at the chart, it looks less like a stock and more like a
rocket launch.
Exactly, a rocket launch.
It really is a sight to behold. But look, we have to be careful here. Usually when we see a move this vertical, especially in biotech, my alarm bells start ringing.
Oh, for sure.
It usually smells like speculation. It's a rumor about a buyout, or maybe a CEO tweeted a fake emoji, and suddenly the retail crowd goes wild. It's usually smoke.
Right. I see this and I immediately think, meme stock, someone on a forum shouted buy and everyone just piled in. But you're telling me this is different. You're telling me there is actually fire behind this smoke.
Completely different. What we are witnessing today isn't just a hype cycle. It is a massive fundamental shift. We're watching a company graduate. Yeah. ImmunityBio has effectively moved from being a speculative clinical stage biotech company, which, let's be honest, is often just a science experiment with a stock ticker, to a rapidly scaling global commercial powerhouse.
Whoa, hold on. Powerhouse is a heavy word. You don't get to wear that badge just because you had one good Tuesday in the markets.
You don't. You earn it with numbers. And the mission for this deep dive is to prove that the numbers actually back up that claim.
Okay, I'm listening. But I'm bringing my skepticism to the table. We've got a stack of sources here for this analysis report, including their latest earnings data, and some breaking news on the regulatory front that, frankly, I did not see coming.
It's a lot to unpack for the listener today.
It is. So here is our roadmap for this deep dive. We need to dissect three main pillars to see what's actually going on. First, the Q4 financial numbers. They crushed expectations, but I want to know if the quality of those earnings is actually good.
Right. And then we need to talk about their global footprint, because this isn't just a U.S. story anymore. They are making moves in Europe that are very specific and, honestly, very aggressive.
And finally, the plot twist.
The big one.
Yeah, the plot twist involving lung cancer and a regulatory win in Saudi Arabia. And then we have to talk about the mechanics of the market itself, the short squeeze that is throwing gasoline on this whole fire.
It's the perfect storm of execution and market dynamics.
All right, let's start with the money. The Q4 2025 earnings report just dropped. Now, usually earnings calls for biotech companies at this stage are, well, let's be polite and say apologetic.
Apologetic is generous.
Right. It's usually, oh, we lost a ton of money, trials are delayed, please keep believing in the dream.
That is the standard script. Please be patient. But ImmunityBio flipped that script entirely today. They delivered a significant beat on both the top and bottom lines. Let's look at the revenue first. Wall Street, the analysts who are paid six figures to predict these things, were expecting net product revenue to come in at around $37.1 million for the quarter.
Which, purely objectively, is a respectable number for where they are.
It is. But ImmunityBio reported $38.3 million.
Okay, I'm going to stop you there. They beat by $1.2 million. In the grand scheme of Wall Street, that's a rounding error. That's loose change in the couch cushions. Why is the market freaking out over $1 million?
Because in this case, the raw dollar amount matters less than the velocity. You have to look at the growth rate. That $38.3 million represents a year-over-year growth for the quarter of 431%.
Wait, 431%?
Yes. In a single quarter compared to the previous year, that is not normal growth. That is hypergrowth. And if we zoom out to the full year picture, the numbers get even more stark. For the full year, they hit $113 million in revenue. That is a 700% increase.
700%. Okay, yeah, that context definitely changes things.
Right. Because when you see a 700% increase in revenue, you aren't just hoping your drug sells anymore. You know it sells. This proves that their flagship immunotherapy, ANK-Tiva, is rapidly becoming the standard of care.
And just to clarify for the listener, this is for a very specific condition, right?
Correct. It's for BCG, unresponsive, non-muscle invasive bladder cancer.
And MIBC.
Exactly. It's a very difficult condition to treat. But the uptake is undeniable. They also released unit sales volume in this analysis report, which is a metric I always look for.
Why volume specifically?
Because you can't fake volume. You can hike prices to massage your revenue numbers, but you can't fake shipping physical vials to clinics.
Good point. And what did that volume look like?
For the full year, they moved 3,745 units. That is up 750%.
So doctors aren't just trying it once, seeing what happens, and moving on. They're ordering it and ordering more of it for their patients.
Precisely. It validates the commercial team's execution. It means the sales reps are getting in the door, and the actual clinical results are keeping that door open. But we should also touch on the bottom line. Earnings per share, or EPS.
Right, because usually with this kind of hypergrowth, Companies are burning cash like crazy. Usually you see revenue go up, but losses just explode because they are spending an absolute fortune on marketing and production.
That's the growth at all costs trap. A lot of companies fall into it. But ImmunityBio avoided it.
Yeah.
Now, they are still operating at a loss, which is totally expected at this stage of scaling. They reported an EPS of negative 6 cents.
A 6-cent loss.
Yeah. But Wall Street expected a loss of 8 cents per share.
So they beat the bottom line by 25%. Let me get this straight. They're losing significantly less money than everyone thought they would, while simultaneously growing revenue by 700%.
That is the big aha moment for institutional investors looking at this report. It shows operating leverage.
Operating leverage.
Yeah. It means that as they scale up, they are becoming more efficient. They aren't bleeding cash proportionally to their growth. It signals a path to profitability that is much, much clearer than it was even 6 months ago.
It's the difference between a science project and a disciplined business.
That's the perfect way to put it. A disciplined business.
Okay, so the financials in the U.S. are rock solid. We've established that. But you mentioned earlier that this isn't just a domestic story anymore. And I feel like often with biotech, we get this tunnel vision on the FDA and the U.S. market because, well, it's the biggest wallet.
We do, because the U.S. is the biggest market by dollar value. But you can't build a global powerhouse by ignoring the rest of the world. ImmunityBio is executing a very aggressive global strategy right now. If we look at the sources, they have recently secured approvals in 33 countries.
33 countries. That is a massive footprint.
It is huge. And the crown jewel of that expansion recently was the European Commission granting conditional approval for Ankitiva. Europe is a huge market, fragmented, yes, but the patient population is enormous.
But hold on, getting a stamp of approval on paper is one thing. Actually selling the drug in France, Germany, Italy, that's a logistical nightmare, isn't it?
Oh, absolutely.
You can't just mail the vials from California. You need boots on the ground. You need to navigate different languages, entirely different reimbursement systems in every single country.
You hit on the core problem for mid-cap biotechs. Commercialization in Europe is incredibly difficult and wildly expensive. If ImmunityBio tried to do this alone, hiring HR in Paris, setting up distribution hubs in Berlin, they would burn through their cash in a heartbeat. It would take 2 years just to get started.
So how are they getting around that?
They aren't going it alone. This is where their partnership with Accord Healthcare is so significant in the report.
Accord Healthcare, they are the big generics and biosimilars player.
Massive player. They already have infrastructure everywhere in Europe. So ImmunityBio isn't trying to build the rails, they're just renting the train. The analysis report mentions an 85-person sales force.
Wait, purely for this rollout?
Yes. They are deploying an 85-person sales force across 30 European nations right now. Think about the speed at which they can move with that kind of backing.
That's incredible. I mean, if they had to hire and train 85 specialized oncology reps themselves, we'd be talking about this in 2028.
Exactly. With Accord, it's nearly instant. From a strategic perspective, this creates a widening global moat. They aren't just winning in the U.S., they are planting flags all over the world before competitors can even lace up their shoes.
So we have the U.S. revenue exploding. We have Europe coming online with a massive instant sales force. But then looking through the sources, there is this curveball. The Saudi Food and Drug Authority.
This is the plot twist I was waiting for.
Yeah. I mean, usually regulatory news from Saudi Arabia doesn't headline a U.S. biotech story. But the source material emphasizes this as a massive milestone. Why? Is the Saudi market itself that critical?
The market size there is definitely growing, but no, that's not the main story. To understand why this is huge, you have to look at what they actually approved. Up until now, Ankitiva has been a bladder cancer story. That is the indication it is approved for.
Right. NMIBC, that's the box it lives in.
Well, the Saudi Food and Drug Authority, the SFDA, granted accelerated approval for Ankitiva, but not for bladder cancer.
Wait, really?
They approved it for metastatic non-small cell lung cancer, or NSCLC, specifically used in combination with checkpoint inhibitors.
Whoa. Okay, let's stop and think about that. They got approval for a completely different type of cancer.
Yes. And this is so what that is driving some of today's crazy excitement. This is the first global authorization for Ankitiva outside of bladder cancer.
And lung cancer is, well, unfortunately, it's a much more common and deadly disease than bladder cancer, right?
Drastically so. Non-small cell lung cancer is one of the largest oncology markets in the entire world. By securing this approval, even if it is just in Saudi Arabia for now, ImmunityBio has validated their entire platform.
Validated the platform. Explain what you mean by that for our listener. Why does a regulatory win in Saudi Arabia matter for the stock price in New York?
It matters because it proves Ankitiva isn't a one-trick pony. It's not a drug that only works on the specific biology of bladder tissue. This approval suggests that the mechanism of action, how the drug actually stimulates the immune system to hunt down tumors, works across different tumor types entirely.
So it's like a master key.
That's a great analogy. It's a master key for the immune system. Yeah. If it works in the bladder and it works in the lung, investors start doing the math. What about head and neck cancer? What about melanoma? Suddenly, the valuation of the company isn't based on one single disease. It's based on a platform that could potentially treat many.
And getting that regulatory stamp of approval, even abroad, provides a lot of data, doesn't it?
It provides real-world evidence, and real-world evidence is absolute gold in biotech. They can now take that data from the Saudi rollout and use it to bolster their case everywhere else.
So we have the fundamentals down. Revenue is up. Global expansion is happening. There's a new disease indication. That explains why the stock should be up today. But looking at the chart, this feels violent. This feels like more than just standard good news.
You are spotting the difference between natural buying and a squeeze. This brings us to the fourth pillar of our deep dive, the market mechanics.
The dreaded short squeeze, or the beloved short squeeze, I guess, if you're holding the stock.
To understand this, we have to look at how IBRX was positioned before today's opening bell. It was a heavily shorted stock.
The source says short interest was sitting around 35% of the float. For those listening who might not trade every day, can you break that down? Is 35% a lot?
It is astronomically high. To give you context, anything over 10% is considered high, 20% is extreme, 35%, that is a crowded theater with everyone screaming fire.
So roughly 1 in 3 available shares was a bet against the company?
Exactly. The float is the number of shares actually available to trade on the open market. Short interest is the percentage of those shares that people have borrowed and sold, betting the price will go down. These short sellers were betting that the company would fail or run out of money, or that the earnings report today would be a disaster.
They were betting on a collapse, and then the earnings were incredible.
The worst possible scenario for them. So imagine you are a short seller. You borrowed a stock at, say, $5 and sold it, hoping to buy it back at $3 to pocket the difference. Suddenly, the news drops, and the stock is at $8, $9, $10.
You are losing money by the second.
You are hemorrhaging money. And the only way to stop the bleeding is to cover. You have to buy the stock back at market price to return it to the lender.
So you have regular investors buying because the earnings are objectively good. And now you have this massive group of short sellers who are basically forced to buy just to survive.
It creates a feedback loop, aggressive buying pressure from both sides. It's an imbalance of supply and demand. Everyone wants to buy, nobody wants to sell.
And the analysis report mentions a very specific number regarding the pain these short sellers are feeling right now.
Yeah, I saw that. Paper losses near the $500 million mark this year.
That is $500 million of miscalculation.
Financial gravity is catching up with the skeptics today.
Right.
When you have 35% of the float needing to buy and the stock is rocketing up, it creates a pure panic. That is why you see that vertical line on the chart. It's not just optimism, it's forced liquidation.
It's amazing how mechanics can amplify fundamentals. The good news lit the match, but the short sellers provided the gasoline.
That's the perfect way to describe it. Without the short position, the stock would be up nicely. With the short position, it goes parabolic.
So where does this leave us? We've got the surge, we've got the squeeze, but what is the outlook? Is this a one-day wonder? Does the stock crash back down once the shorts have finally covered?
Well, let's look at what the pros are saying now. The analyst sentiment on Wall Street is shifting rapidly. They're waking up to the new reality. The consensus rating among covering analysts is now a strong buy, specifically an 80% strong buy and 20% buy ratio.
So nobody is saying sell or even hold anymore?
Not with these growth numbers. It's practically impossible to justify a sell rating on a company growing top-line revenue by 700%. And the Zacks rank was upgraded to a number 2, buy based on these estimate revisions. Basically, the big banks are rerunning their models today and realizing their old price targets were way, way too low.
And looking ahead, what is the next big catalyst for you? We can't just rest on Q4 forever. What's the next carrot on the stick for investors?
The market is already looking ahead to 2026. Remember that Saudi lung cancer approval we talked about?
Hard to forget.
Well, the company isn't just letting that sit there. They're planning discussions with the US FDA regarding an accelerated approval pathway for NSCLC lung cancer later in 2026.
So they're taking the win in Saudi Arabia and bringing that data straight back home to the FDA.
Precisely. This is the land and expand strategy in action. You land the approval in a smaller market, you gather the real-world data, you prove safety and efficacy at scale, and then you bring that complete package to the FDA.
And if they can replicate that regulatory success in the U.S. market?
The U.S. lung cancer market is massive. That is the next level of valuation for this company. It de-risks the commercial profile even further because they aren't relying on just one disease or one region.
It seems like they are playing a very smart game of chess. Win in the niche market with bladder cancer, expand globally with partners like Accord to keep your overhead costs down, prove the platform in a new indication like lung cancer overseas, and then bring that back to the primary U.S. market.
It's textbook execution. And today's price action tells you that for the first time, the broader market finally believes they can actually pull it off.
It really is a fascinating turnaround. I mean, going from speculative to commercial powerhouse is the dream for every biotech company, but so few actually make it across that chasm.
It is called the Valley of Death for a reason. Most companies run out of cash, or their drugs just flat out fail in phase 3 trials. ImmunityBio has officially crossed the bridge.
So let's wrap this up for you, the listener. We've covered a lot of ground today in this analysis report.
Yeah, we have.
If we had to distill this perfect storm down, it really comes to 3 or 4 big things. First, the financials. You just cannot ignore 700% revenue growth for the year. That is undeniable execution.
Second is the global rollout. 33 countries approved and a massive instant sales force hitting the ground in Europe via Accord Healthcare. That solves their scale problem overnight.
Third, the platform validation. The Saudi approval for lung cancer proves this isn't just a bladder cancer drug, it's a versatile platform.
And finally, the market mechanics. A massive short squeeze forcing the skeptics to buy, fueling the rally, and permanently resetting the stock's valuation.
It's rare to see all those things line up on the exact same day.
It is. But I think the biggest takeaway here is execution. For years, this is a story about potential. Potential is great, but you can't spend it. You can't pay salaries with potential. Now it's a story about performance. They are putting actual numbers on the board.
That's the key shift. They aren't selling a dream anymore. They are selling a drug. Now, before we sign off, I want to leave you, the listener, with a thought to mull over. We talked about bladder cancer. We talked about lung cancer.
And the connection between the two.
Right. If this single immunotherapy platform, Anktivia, works for 2 very different types of cancer, and it has now secured approval for both in different parts of the world.
Raises the big question.
Exactly. How many other cancer types might this unlock? If the biological mechanism is universal, are we looking at a drug that could eventually target 5 types, 10 types?
That is the multi-billion-dollar question. And that is what the market is going to be trying to figure out for the next few years. If the key fits 2 locks, does it fit the whole building?
It's a fascinating time to be watching this space. We'll be keeping a close eye on it for you.
Don't forget to like, share, and subscribe for more.